We are now over a week into the new year, which brings with it some financial changes that may have an impact on your wallet. Joining us now is Mark Triplett with Triplett-Westendorf Financial Group. Mark, as always, thanks for joining us. Tax day will be here before we know it. What tax changes should people be aware of as we all prepare to file?
Well, 2002 wasn't nearly as exciting, but there are a few things that we should be aware of. The child tax credit and child and dependent tax credits were reduced this year. The child tax credit decreases to $2,000 per child. The child and dependent credit is capped at $3,000 per for one dependent rather, and $6,000 total. Charitable deductions are another thing that are changing. Some folks last year that filed standard deductions could also deduct another $300 against a charitable donation they made. Now, if you want to do any charitable deductions, you really have to itemize, and that doesn't make sense to do unless your itemized deductions are greater than your standard deduction. And last but not least, I mentioned this on a previous session, but the Form 1099-K was going to be required in 2022. That got pushed back to 2023, and that really affects folks that maybe have a side hustle or a side business, and they're being paid through a payment program or a payment app like Venmo or PayPal or something like that. So that's getting knocked back to 2023.
And then what other new rules should we be aware of with this new year starting? There's just been a lot of changes to try to track.
Yeah, so many. I mean, last time we talked about the Secure Act, and I'll try to kind of talk about some of the things that I think are not included in that we missed last time. I mean, really, income tax brackets are increasing because of inflation. So folks can technically make more than they did last year without really increasing their effective tax rate. Those tax brackets increased by 7%. Also, the standard deduction is increasing by about 7% as well. So both of those are going to help folks keep their taxes a little bit lower than maybe they would have in the previous year unless their income dramatically increases. One of my favorite things that's happening this year is the fact that Iowans age 55 and older, so if you turn 55 this year by December 31st, you're now exempt from paying state tax on retirement income. This is huge for our folks who we serve that are retiring in Iowa and want to stay here in Iowa. That's going to impact their taxes on pension income, annuity income, distributions from IRAs, 401ks, and other IOUs, the IRS. They still have to pay federal tax, but they can even do Roth conversions now if you're 55 and older and not have to pay that state income tax, which is going to be really a significant opportunity for us to do some future tax planning.
And real quick before we go, it's easy for folks to kind of just glaze over when we talk finances, but what are the consequences if you don't stay on top of these changes?
Well, you miss out. Either end up paying too much in taxes, more than you should, or you miss out on opportunities to maybe take advantage of some of these new changes. So I think it's really important that you meet with your financial advisor as well as your CPA, determine which of these changes is going to impact you and in what way it's going to impact you, and then put a strategy together and then take action on that strategy to make the most of these changes for your individual plan.
All about having a plan to start with, and then of course, step by step, weave your way through it. Thank you for joining us today. Always such important advice. We all need help financially. Who doesn't, right? Unless we're you. All right. Thanks.